orb, right? So for me, it was only about a 1.2 R. I wanted to stay out of the markets today, primarily, or stay out of long trades, primarily because of the chop we've been having throughout the whole of March or the previous 2 weeks. So if we just take a look at the ATAS platform, let's kind of see what we get, right? So these were the levels I had. So I'm just going to do it straight off the ATAS platform so that people can understand. But we've had a lot of chop recently, so I wanted to be in and out. I'm just going to quickly break down how I did that. So we had a key level on ES. So this is ES level 6460 to 70 or 71. Here was the key level, and so I'm going to be going over a specific entry model, right? So what we're looking for is, I mean, we had a level down here at 6453 to 46 area. So what we saw was market open, right? So 930, 934, and then 933. So we're seeing the first initial rejection of sellers. So here was a rejection of sellers. As you can see here, let's take a look at this level, 64.54 to about 64.50. A lot of aggressive sell orders, break higher. Notice another thing. Let's get granular into what we're looking at. We're seeing a lot of zeros, right? So zero, a finished auction, right? 0, 0, 0, 0, 0. We're seeing a lot of zeros down here, right? A lot of aggressive selling and zeros, which basically shows us that sellers are being rejected from this region. So from a candlestick perspective, this is what you guys can't quite see, or at least appreciate, right? So there was this trade. I only caught 1 point. I think it was like 1 point. Yeah, maybe 1.3, something like that. 1.2, 1.3 R. Now, if we just take a look at this, we're looking at this. This is the 15-minute orb. Now, the problem that I see with 15-minute orb traders is that they try and take the orb at face value without understanding the true value behind it. And when you do that, you can't really win. There's no way of actually winning. So what we're looking at here is a rejection here, and then we're looking at the rejections here, and then we're looking at the rejections here. So these three areas, right? 1, 2, 3. And this now is what we call absorption. Right, so this is how an orb actually works. So if you're an orb trader, or you trade volume or anything like that, you want to focus on these three specific areas, which is the absorption, right? Now, the absorption we saw very, very clearly here, so I'm going to try and get them up next to each other so we can see what's going on. So we can see here in circle number 1 here, this is 932. 933 ES futures 31st of March, 64.53, right? Take a look at the price, 64.53. What we can see here is a lot of aggressive selling right here. Market bounces higher. Then we see the second rejection. A lot of aggressive selling, 105 for 21. That means there's 105 sell orders for only 21 buy orders, right? And the market still found an area of support, right? We were bouncing off this region. So it's around about 64.55, 64.60. These are the aggressive sell orders. Now, what basically made me trigger, because I get questioned on this. So I'm going to try and break this one down. Why did I go long? Okay, good question. So I had this line over here, and what I'm looking for is a break and retest. So I'm going to very, very simply break this down. So we wait for the first 15 minutes, right? So the first 15 minutes printed, and we want to see a retest, break and retest. So what that means is this for me is a break. On the 1 minute time frame, I will accept wicks as a break. This is my break. So I'm looking for break and retest. Notice how it's break and retest. Now, in order for your retest to be valid, you have to use order flow. This is the difference between orb traders and, I guess, consistent traders. Consistent traders take the orb and apply the price action behind it to make it valid, right? So those who trade without order flow will end up paying those who do on a long enough time horizon. So you want to focus on this here. So here was your first rejection, and now I'm talking specifically about the break and retest. So here was the break. Bosh. There's your break, and here's your retest. Now, in order for us to go long, right, so I went long at, let's break down the entry. So I went long at 64.74. 64.74. So I went long just over here, 64.74. So there, 64.74. So just as we were crossing this red line, stops just below the zone. I think I had them here. And for me, in this choppy market, I'm only targeting is about 1 to 2, I think, or 1.2 R, so nothing crazy. Now, I'm happy to take a short risk reward considering we've had so much chop, but I want to break down these three things. So we were break, that's 1, retest 2, and entry 3. So it's 3 separate steps. It's important to get that right. It's 3 separate steps. So the first thing is you're looking for a break. Let me draw that right. So break, that's kind of number one. Number two, you're looking for a retest back into the zone. And three, this is going to be your entry here after you see absorption. So step two is arguably the most important, because step two validates whether your trade to go long is actually valid. And so you want to know what's going on here. So this is now 9:44, 9:45 Eastern. So again, what was going on at 9:44, 9:45 Eastern, right? So where I've circled here is what I'm looking at here. So specifically, we've had break, tons of aggressive buyers. Now, when we come and have the retest, what we can see again is a ton of aggressive selling. So I've made a lot of content on how to actually interpret candles properly. So inside of candles, there's sell orders and buy orders, right? There's sell orders on the left, buy orders on the right. And so what's basically happening is when you see red inside the candle, that tells us that there are more aggressive sell orders. There are more sell orders hitting the bid than buy orders hitting the ask. And so what that means, or what you need to know about that, is the sellers are trying to drive price down. And so what we can see is price doesn't really break outside the level. I mean, we get a small wick, but nothing crazy, right? We're seeing the follow through, and that's where my entry was. So there you see that little green, that little blue triangle. That's where the entry was. So we had break here, retest, and boom. Now, if we break above this line, this red line, right, after seeing all the selling over here, the question you want to ask yourself is, were those sellers successful? The answer is no. And so that confirms the breakout. And so if you're trading orbs without confirmation, you will end up paying those who do. On a long enough time horizon, you will just pay the ones who have the right confirmation. And so it was a very quick trade, very, very quick trade. And I'm very happy I got out, because we are now going to chop around, I think, right? So not a fan of this price action. So for me, I'm just, I'm happy to take my 1.2, 1.5, 1R. And then from here, what we can see is 9:50, right? 9:50. And now we're going into 10:16 Eastern. So it's about 26 minutes so far of pure chop. So in other words, you take whatever you can and get out, right? That's probably the best piece of advice I can give you in 2026. I mean, well, March of 2026. The conditions, the price action hasn't been the easiest to trade, but you've got to define your levels, wait for price to come to your levels, and most importantly, understand what's going on in those levels to make any kind of proper trading decision.